If you said your costs were rising, you're not alone. Everybody is feeling the burn. I'm going to show you what's happening between the rich and the poor, and we're going to look at what you can do about it. There are actions you can take. The truth is so important because it's going to separate you from the masses. We are going to look at how to thrive and prosper as well. I think this is really important right now more than ever before. They're taking actions out there, the central bankers, to make sure that you can never be able to sustain yourself. But of course, we need to do our best. Let's begin right here. The very first thing, it's all about inflation. Yes, we've been hearing a lot about it, and you could see some of their stats. They've come down from their peak, but now there's been a resurgence, and this is starting to worry many involved, particularly those at the Fed. Well, we got something to show you here. The first thing being China has increasingly been doing stimulus, and of course that is very bullish when you look at it for the investor. The ECB is basically done with rate hikes at this point. We'll cover that in depth first, and then we're going to look at the stock markets rejoicing basically because the technical analysis shows they have no fear at all. And we have to also look at the spending being up. Yes, certainly overall, but why? Because people were paying more for gas. You got to understand the truth so that you know that next layer of information has what we really need. Okay, there's the surface level stuff. We dig just one level deeper and it is a whole different story. Let's show you this. ECB delivers 10th hike as Lagarde won't quite confirm rate peak. All right, so now it's at 4%. 4%, this is the highest it's ever been for the ECB. So it is significant in that respect. They are not going to handle inflation, of course, but this is what they're telling us, that they are doing their best. They want to make sure that inflation is going to come down. They didn't exactly commit to more, but the language basically showed that for all intents and purposes, this is likely it. Well, the problems haven't been resolved. The fundamental issues here with their energy, with other things, well, they haven't been dealt with. And that's the way these things go. You've got to pay the price. Looking at China's central bank cutting their RRR, this is the reserve requirement ratio, for the second time in 2023. You could get this directly from the source itself, as I always show you the direct source. PBOC to cut required reserve ratio for financial institutions on September 15, 2023. What does this mean? Well, imagine these banks, like fractional reserve banking, all banks, doesn't matter if you're in China, doesn't matter if you're in the US, Canada, wherever, they all have these reserve ratios. And that basically means, look, you can only lend out certain amount, and we'll keep that at, let's say, 10%, and you could loan out the rest. All right. And now they keep cutting that further and further down. Okay. So, by the way, in the US, it's 0% right now. 0%. Okay. Crazy. Yes, I know. Anyway, they're trying to stimulate and the markets love it. Okay, so they've been doing a lot of different things, not like a huge bazooka, but they have definitely been doing a bunch of different things. Now, here is the resurgence, and this is showing us the PPI. PPI is the producer price index. So this is like, think of it like raw materials. Yes, the CPI, that's going to be you as the consumer, what kind of inflation you deal with. But the producers, that might be like copper, that might be the iron ore, that might be like the raw material, and then they produce a product that the end consumer will then purchase. A lot of stuff is, made up just like the CPI. A lot of it goes into that, but just in general, we could see that this has now, again, 2 months in a row, come up. So after it had been declining in the year over year, now something has changed. So in the previous video to this, I covered what happened with the CPI, and I looked at the resurgence there. Also, again, we are seeing the same thing pop up 2 months in a row for the PPI. Does this mean that we are now going to see further inflation in their own numbers? Forget about the true numbers. In their own numbers? Oh my goodness. Look, I got to tell you about this further at the end of the video, what you've got to do. So stick with me as we look at all of this. If you appreciated this information so far as I show you this resurgence, then you want to support me by hitting that thumbs up. It really does help out. Look here. You can look at the final demand goods as well as final demand services. And yes, the services have come down from their peak. They're still elevated, but we're seeing the goods starting to increase. All right. And then we have this final demand year over year and the processed goods for intermediate demand year over year. Both of these have come up. The whole point here is that we are seeing it in the CPI. We're looking at different ways to look at the PPI. All of these have started to go up. Now, it's a couple months, all right? So we don't have the biggest trend at this point, but anything that's not trending downwards at this time means that the Federal Reserve technically would have to keep their interest rates higher for longer. Okay, but what's next after that? We got to look at what the 1% is doing. Like, what is the richest of the rich people, even beyond the 1%? What actions are they taking right now? Well, the US households are getting very long on financial assets. Households accumulated more financial assets despite elevated inflation right now. And you look at the wealthiest bought just under $1 trillion of stocks and bonds. That's a change between the second quarter of 2022 to the first quarter of 2023. You look at them putting more and more money into basically everything right now. But certainly they're showing us the equities and bonds. They're really buying up a lot of it. Least well off, okay? So let's say like the bottom percentage of people, bottom 50%, took out an extra $100 billion in consumer loans. So while the richest of the rich people are buying stocks, well, you have the people in the bottom 50% taking out loans. And those loans right now are at the highest interest likely they've ever seen in their lifetime, or at least in the last several decades. So that's a bad sign of what's coming here, because it's starting to impact the people that are in the bottom 50%. If you look at it, actually, it is really the bottom 80%, even higher, that are experiencing, to one degree or another, some troubles. It's a very important stat, and I'll tell you why in a second here. Looking at where they're also putting their money is the money markets. We're seeing a great surge in that, both on the retail side and the institutional side. More money going into money market funds. Why? Well, 5%. They're attracted to that. It makes sense. They want a yield. They want to get a return. And when we look at the wealthiest people, you might say, you know what? I don't want to do that. I don't want to do this. The wealthiest people, a lot of them are really just trying to take what they have and preserve it. Once you get to, let's say, 10 million, 20 million and beyond, you're not in the same position as the majority, even high income people. You're not in that. You're just trying to preserve what you have, keep as much as you can in assets and beat inflation if possible, weather any storm, and then grow beyond that. It's a different scenario for somebody who might have, I got a real estate investment there. I got the portfolio over here. This is a totally different world. So you got to understand where you are at. And, that's something that I talk about a lot in Compass. Compass is available to those on the Discord right now. We'll talk about that in a second as well. I just want to show you here, the banks are using the emergency facility again at a record from the Fed. And this is over $100 billion worth. So in about 6 months, this emergency facility is going to be taken off, supposedly. Well, what are they going to do? Where are they going to put that money? Are they going to reinvest that? Are they going to have to extend it? Who knows? But it's over $100 billion worth. And it shows us that this emergency fund is being utilized right now for the banks as a lifeline. We are looking at least at the time of this video recording, $90 a barrel in crude oil. This is the inflation, people. This is where it's coming from because people are paying more for their gas. That's showing up in the data. Yes, there's inflation just about everywhere, But I need you to understand that if crude oil is up, that means gasoline is up. And then if it goes up, people pay more at the pump. They can't go to the restaurant as much. They can't order, these things and those things and basically contribute to the economy. When we look at the technical analysis based on that, which, of course, something volatile as oil, not always the best thing to do. But I'm just showing you anyway that it has much more room to go up before any resistance in the technicals anyway. Okay, so that's that. And I think it's important to look at all of this data and really start to highlight like what's going to happen. Where are we going in this regard? It's important because most people are being told that there's going to be this spectacular collapse in which all asset prices fall considerably. Oh, don't worry, guys. You just got to hang in there. And when real estate prices crash by 80%, you're going to be able to buy. Oh, that gets the clicks. That gets the views. Let me tell you, I know that. I know that because my analytics tell me what people are watching. Oh, and it tells you that, but that's not the truth. That just isn't the truth. And if we do get into that scenario where all asset prices collapse by 80%, you better watch yourself. What we can experience instead, likely, is more towards mega inflation. I don't know how high it will go, and certainly it's going to depend on your circumstances. But what we are seeing right now today is that the Federal Reserve and all these other central banks are on the move to start to flip. Many central banks, China leading the way, others in Latin America have done this. And I'm also noticing, with the ECB kind of saying, okay, this is probably it. This means that we are more likely to start to stimulate. But it doesn't happen all at once where every single country starts to flip. No, there's different dynamics of things. Watch it very closely because inflation could be coming your way. As a result of that, what can you do? What should you be doing? Well, there's a lot of things. Depends on your circumstances, but a few things. When inflation is high, spending can increase, not decrease. Because think about this. If you think that whatever that thing you're interested in is going to be more expensive tomorrow, you buy it today because you don't want to pay the extra price. You want to get it essentially on a discount. So keep that in mind. So you can actually take more spending right now as a business owner if there's inflation. But it depends on the products and services that you are into. Be involved in businesses that are needed. Yes, absolutely. You can't be in things that, are just not necessary. You got to be involved in that which is important so that people want to use your stuff or more likely have to. You get what I'm saying? There's services that people really can't do without. So you can teach them that skill or you can be the one to provide that service. Eliminate any services that you don't need. Take that and reinvest. Reinvest in yourself, number one, into your business, into your household. Now is the time. Okay. So these are the things that we're dealing with right now. Understand that the most likely circumstance is inflation. Like if you just look at it, yes, we can experience, absolutely we can experience deflation. No question about it. But how long will it last? We can see that the actions that these central bankers take very clearly are there to devalue your currency. Would you say so or not? Let's have that discussion in the comments below. Let me know. And if you want to converse with me directly, I've even been giving shout outs to people, video shout outs to people who are joining the Discord right now. And, join up on here. It's totally free. And everybody that's on that Discord is going to get the early access. So the mentorship group got early access to Compass first. And then it's the Discord. And then I will release that to everyone else. Okay, so you can get that link in the description. And totally free, of course. And the comment of the day, Niels de Graaf, probably just butchered your name, I apologize. The weakest link, at least in the Netherlands, is commercial real estate. Two bigger corporations just are in the process of declaring bankruptcy. Big Bazaar, a sort of dollar store, and BCC, an electronics company. They have about 100 buildings combined, and I think one or two companies fall. It's still doable, but once one after the other starts to go bankrupt, then you get a problem for commercial real estate companies. We will see what happens in the coming months. Thank you very much for the comment, by the way. This is a problem not just in the Netherlands, seeing it everywhere. Commercial real estate is the one to watch. Watch the debt that's connected to it, and of course, your exposure, if you do have any, to the commercial real estate, very dangerous right now. If you appreciate this information, I want to thank you for being here. Hit that thumbs up. It does support the channel, and I'll see you tomorrow. Take care.